Okay, ladies and gentlemen. So today we have Lynette Zang back on the show, who is the founder of Zang Internationals. And today we will cover a whole range of different topics. We will look at US economy, of course, precious metals, commodities, energy, Iran war, and many other very interesting topics. So Lynette, thank you so much for being here.
Anytime, Vladislav. I'm very happy that you invited me back.
It's always a pleasure, Lynette. Thank you so much for being here. I usually like to start with a certain topic, but I'll do it slightly different this time. So, if you could tell us, Lynette, what's on your mind right now? What would be the main topics that you're thinking about at this moment?
Well, I talk to a lot of people, and a lot of people are concerned because they're watching the spot gold and the spot silver market, and they're seeing it now. I don't know what day this is going to air, but on this particular day, it's somewhere around 4,000 off of a top of about what, 54, 5,500. And so they think that Wall Street is telling them the truth. And that really is a lie. So, what is top of my mind is if people want to really understand what's happening in the gold and silver markets, that they look at the physical markets. Because as we've watched those spot contracts, which is just a trading market, that's all it is, as we have watched them decline, we are also watching the gold and silver at the COMEX. Somebody's taken delivery of the physical metal. So if the demand went away, like you might indicate from the spot markets, well, then who's taking delivery? Because that's not normal in the US. So there's a tale of two markets. And for people, what I want them to do is look at the true market, which is the physical market. Unless, of course, you're a trader, then that's a different thing. But if you're looking to protect your wealth and your purchasing power and create a foundation of safety in sound money like global central banks are doing, then don't believe Wall Street's lie. Look beneath the surface, and you're going to see that there's a lot of delivery that is happening to the smart money, to those that understand what's really happening in the markets.
Yeah, so I spoke to Michael Howell recently on that, and he very much looks at the Chinese markets, and
Mhm.
there's a huge correlation between Chinese liquidity and gold price measured in yuan, meaning that they do control gold markets to a very large extent. And he demonstrated that Chinese liquidity dropped significantly during the Iran war, meaning that if that changes, if there's more uh, import that liquidity into the markets, that could correlate with the next move in gold. Do you pay attention to China much in relation to the precious metals markets?
I do pay attention to China, but I don't believe the contracts. The contracts are all counterparty risk. And but I do pay attention to the premiums because that is a more honest market, more reflective of a true supply and demand market. But you brought up a really important point, and I really wish people would get this point as well. Whoever holds the gold, because this is the primary currency metal, holds the power. And for me, I believe so strongly in this. This is my biggest focus, is to really get sound money back in the global system and put the power back in the public's hands. I'm sorry, because I really wish I could say something different, but I don't see anybody in government or central banking that is looking out for the public's best interest. That's not their job. It used to be their job, but we broke the Constitution in this country back in 1913. And so we took the power from the people, because when you here's an interesting concept. Let me throw this one out at you. In the beginning, gold and silver were our money, and gold anchored debt, meaning Gold forces governments and central bankers to have fiscal responsibility. So there are limitations on how much debt they could grow. So in the beginning, gold anchored debt. After 1971, that debt anchored fiat money. Wait a minute. There are no restrictions anymore. So people are wondering why everything is so expensive, because gold and silver are money not by decree, right? That is money that is in the ground, that in all thousands of years, they have not figured out how to duplicate it. That says a lot. And when you hold this, you are truly outside of their system. And according to the Bank for International Settlements, which is the biggest bank in the world, the central banker's central bank, only gold held at home, that is the only financial asset that runs zero counterparty risk. So when you're looking at those spot markets, that's all counterparty risk. Those are contracts. When you're holding this stuff, and it says it right on the bill, Federal Reserve note. A note is a debt instrument. You're working for debt. Is that okay with you? Because it's not okay with me. The original intent and my intent in money is as a store of labor, so that you're fairly paid for it. No matter when you use it, you're still fairly paid for the original labor that created it. We have to take that back. We have to take our power back. If we don't, and we go fully into a digital system, and you have nothing outside of that system, they say jump, you have to say how high.
Yes, unfortunately, that's the true, Lynette, and that's the thing. If we get gold back into the system, how are they going to print? They will not be able to print, and that's all they can do and want to do every single time we get a crisis. And every single time, maybe a politician wants to get elected, but we are not going to get into that. Thank you so much for that, Lynette. So, if we could
You're
talk a
welcome.
little.
I wanted to point out, though, whenever you enter into a new system, and this is true in 1913, and it was true in the 70s to the 80s, and it's true into the system that we're moving into, they always create a lot of that, what they call flexible money, right? But when money is flexible, who does it benefit and who does it hurt? We have to protect the world from those that it hurts. We have to do that with sound money, and which is redeemable gold. What a concept. You hold the gold, it's outside the system. It's if the gold that's in the system, and we can do it in a digital system, and it doesn't even have to be 100% back. 40% is fine. I don't like what you're doing. Send me my gold. You can keep the rest of the garbage. I don't care about that. But send me my gold, right? Just the right to do that creates restrictions and shifts power. They want to shift that power all to those that are currently in the power that has gotten all of the wealth to begin with. Well, I say we need to take our power back.
Yes, again, excellent points, Lynette. So, if we could stay a little bit more on this topic of precious metals. So, we have been, after this huge run that we had, we've been sort of stuck in this range now. Now we're close to 4,000. Where do you believe we are right now in the bull market? Do you still believe the bull market is still in place? And because, people are trying to find similarities with the 2011 and things like that. Where do you think we stand?
That kind of indicates the trust in the fiat money markets. But what I can tell you 100% is that I'm going to answer your question. This is money. This is also money. Here's the difference. Fiat money by decree with a stated value, face value. Sound money from the God or the universe or whatever you happen to believe in, but man did not create this, right? So when you're talking about a bull market, what you always really want to know is what's the true value of that asset or that instrument. Because quite honestly, that's the only way for you to know if something's undervalued, fairly valued, or overvalued. Therefore, do I want to buy it? Do I want to hold it? Do I want to liquidate it? I can sit here and tell you, since these are both money, just the flip side of the coin, that the true value of an ounce of gold is somewhere in the vicinity, I don't know, 36, 40,000 at this point. It could be, by the time we do the reset, it could be 20 quadrillion, right? Here's the problem. You are trained to put value in this. This has no value. Look at the Federal Reserve's purchasing power chart, and it shows you that the true value of this is 0, and that the current purchasing power value of this is less than 3 cents. So when you're talking about a bull market, I can 100% tell you that both gold and silver are severely undervalued. No, this bull market hasn't even really yet begun, not even marginally so. You should be buying it hands over fist and converting this garbage that has no value into sound money that is severely undervalued. And let me tell you, every single time they want to create inflation, what that really means is they're saying this is overvalued and we're taking it down. And that's been the plan since 1913. Proof positive. I can give you all the proof in the world.
And so you mentioned silver as well, and would you expect gold to silver ratio to get smaller as the bull market progresses? Because that's something we've seen historically, right?
Absolutely. And the answer is yes. And we have been, right? I do expect that gold silver ratio to grow more narrow. However, history shows us that once we do fully enter into the hyperinflationary stage, what became more narrow then grows wider again. Having said that, what silver does remarkably well, and really in any form, doesn't matter, gold and silver in any form is monetary. They're monetary at their base. It maintains your ability to purchase the same food, the same goods and services. What gold does during that same period of time is it expands your ability to buy the same goods and services, and actually puts you in a position, since it holds its purchasing power, to convert into other income producing assets or other assets that become severely undervalued. Right now, they're severely overvalued because they've been targeted by this stuff. And the other thing that I really want to point out when you're talking about the markets and the bull market and then blah, 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 and the gold silver ratio, this is all about a trade. I don't trade gold and silver. Gold and silver are my monetary foundation. So I want, depending upon where we are in the trend cycle, would determine what kind of gold and silver I have and how much of that is, and how much of my portfolio is that. But you see, I've been studying this stuff on some level my entire life, and particularly currency life cycle since 1987. So I have a very, very strong opinion on what's really happening in here, which is a transition into a new system, and the real opportunity here, which is not, is this going to go up in terms of dollars? Because I always go back to my $10 trillion Zimbabwe note that buys me nothing. I don't care how many zeros they have. 10 trillion times 0 is 0. This does not require permissions, or it doesn't require the performance of a government or any corporation to keep a promise. This is the asset. This is a claim, potentially. Well, actually, this was a claim on the asset, this gold certificate. It's got a little gold thing here. And then they transitioned us into the Federal Reserve note. And I'm telling you, I know that this is a very hard concept for people to believe because the dollar's been around since the day they were born. Read the top of it, and I have all of the data. You're working for corporate debt. You're working for corporate debt. And when you're working for corporate debt, that means that they have the ability to manipulate, create more of this. There's been so much that's created. I just did a piece on this where you're looking at the charts and you can see what's moving the markets and bull markets and bear markets and all that garbage is simply a flow of funds. It is a lie, a lie, a lie. So they created all of this new money for free, particularly since 2008. And so traders, because that's how banks make most of their money, Goldman Sachs is going to have a banner year from all the trading. They like that volatility. They're not long-term. They're short-term, short-term. It's about a trade. And so they've got all this free money and they see this shiny object over here. Let's run over here. And then all the flow of funds go there. Oops, there's another one. Look at these mega IPOs. The funds go over here. So when you're looking at these markets, look at these patterns because you're going to see it. I pulled up an ETF, a GLD ETF, and I pulled up the spot gold chart and the spot silver chart. And darned if they aren't the same pattern. The flow of funds pushing it up to, and it isn't that it was undervalued, too far, too fast. It's just a trade, right? Pushing it up and then pulling it down. It's all the same pattern. So don't believe the lies. Tell me one time that you've seen Wall Street take into account what's your best interest. Not their job.
Yeah, 100%, Lynette. I will ask you this question then. So, about the relationship between stock market and actual economy and how people feel, about current life. So we know that right now, very likely, the economy is very much dependent on the stock market because we know how much money is invested in there. And I spoke to Melody Wright recently. She's a real estate expert, and she also mentions how overvalued real estate is in US right now. If we compare that to medium salary, it's very unaffordable. So would you, and I know that you believe that, of course, the stock market is overvalued and in a bubble. So what happens, Nat, once that changes? Because, we can say, well, we're going to have a big pullback, the Fed will get involved, they're going to print more, that money will go back into the system. But that may not work this time, right?
Well, okay, there were like a few things in there. Number one, people might remember what happened with the 800 billion that they gave to the banks, the Fed put on their balance sheet in 2008. And then subsequently QE1, QE2, QE3, QE4, that's just more of this, more of this, more of this. And every single time they do that, they need more and more and more of it, and they get less and less result. Why? You talked about affordability. Let me tell you, in 1913, the average family of 4 could survive with one wage earner that made $800 a year, not a month, not a day, a year. But when you look at that in terms of gold, and remember, gold is the anchor. Everything was valued against gold because gold is supposed to store the fruits of your labor. And so when you ask me, will they print more? Sure. Venezuela, in the midst of their stock market, or in the midst of their hyperinflation, which they're still in, had the best performing stock market in the world. But their currency, you couldn't buy anything with it. But that's the lie. So people run to the stock market, but all you can do is convert it back into this stuff. And there you go. 10 trillion times zero is zero. It's a very hard concept. And I know because I'm asking people to have the paradigm shift. And that's why, and I don't know if we had this the last time you and I met, but this is a tool that we came up with here at Zang International. And what you're looking is a paradigm shift card. And on this side is a dime that was part of the US currency, right? We used it on a day-to-day basis, and it was 90% silver. And that was prior 64 and earlier. This is a new dime. They look pretty much identical. They do, except when you look on the rim. On the rim of the silver dime, it's all silver. On the other rim, there's a line of a copper color, not even copper, it's just a base metal. But on the day that we happened to buy this, that one dime cost us $6.72. Is that silver going up? That's the dollar going down. And so when you're even looking at these markets and you're seeing the volatility in it and you see spot gold and spot silver go up, no, anything can happen in the short term because it's not a real market. It's a trading market. It's a fiat money market. And by design, they want you to think that things are going up because then you think that that's good. Until you see the price of your food also going up and gas and everything else. And then you think that is bad. But the point that you miss is you think the prices are going up. It really all is reflective of that loss of purchasing power by design. And if I could get people to just make that teeny weeny shift, oops, ooh, I did something with something. Oh, there it is. It's a piece of gold. I don't want to lose that. But if this little paradigm card can help people do it, because I realize most people have never even held sound money. It makes a difference, and it takes it from theory or kind of hearsay into, oh, wow, I see how they are robbing me of my purchasing power by degrading and devaluing the currency that I work for that is supposed to store the value of my labor over time. This does it, but does anybody think that this does it anymore?
Hopefully not, Lynette. So I assume then you would not be surprised if the stock markets continuously go higher, almost in a parabolic move, something similar to what we've seen with Venezuela, maybe not to that extent, or Zimbabwe, but
Why not?
continuously high. Yes, and you
Are we
also
really?
yeah, and you also would not be surprised to see a crash style event, something we have seen throughout history quite often as well.
Correct. You know, actually, I've been saying before it became apparent that I thought we were entering the melt up phase. And when it looks like a hockey stick, I mean, come on. Elon Musk was the first trillionaire. Seriously. That is more of a reflection of the loss of purchasing power, because I can tell you in 1933, there is one of my favorite movies. It's called, and if you haven't seen it, it was filmed in 1933, Gabriel Over the White House. And just to make a long story short, in that movie, this president is talking to all of these foreign leaders. And this was after World War I and before World War II. So it's after World War I. And he says to the president, Mr. French president, you owe the U.S. $1,000 million. What does that tell you? They did not have the term billions during that period of time. That was a reflection because we were still, we were transitioning into a pure fiat, but we still had the discipline of gold behind the currency. Today, trillionaire. Hey, all these, and that's the point. The mega IPOs, right? Oh, shiny stick over here. Okay, there'll be another mega IPO. Oh, shiny stick over here. Don't be fooled by the shiny sticks. That's not in your best interest.
Yes, again, fantastic points, Lynette. So we covered a lot, but if we look at some of the assets that you like other than gold and silver, of course, they're fantastic, and some people may say, well, I have been, buying gold and silver for many years, I stack it, but I have time and energy to, to do some research and look at some of the other maybe commodities, investments. What would be some of the other sectors that you like? Would it be mainly physical things that cannot be printed, maybe commodities as well?
Well, tangible assets for sure, things that have a level of rarity um, and have a higher level of liquidity. But I've been a banker, I've been a stockbroker. This is where I live my life, and I really have been doing this. I'm going to be 72 in a few months, and I really have been doing this on some level, whether it's the tangibles or again banking or stockbrokering, and paying attention to the markets, but the currency markets. So that's not really probably a great question to ask me in particular, because I know the truth of these markets. And I'm 100% certain I think about money differently, or at least I should say, I think about fiat money differently because I don't believe the lie. So this is what I believe in very strongly. There is not one little teeny weeny doubt in my mind, not one, not even a fraction of one, having studied this since 1987, that this is the end of this currency's life cycle. They need you to remain in the system so they can transfer whatever little bit of wealth you might still possess. That's where we are in this trend cycle. Why would I ever look at doing something intangible? Yes, I have to keep cash because I'm running a business, but I have it properly diversified. And that's the thing that I would want your listeners to really know. You want to have a solid foundation of sound money. That's what we do at Zang International. We help you based on your goals, look at what you need to do for yourself. Then, if you want to trade, you want to take on more risk, rock and roll hoochie coo. You should be able to do that because you have a solid foundation. The thing that people do all the time, though, is they confuse opportunity with foundation. No, if you do that and you're wrong, you lose everything. So I believe very strongly in making sure, what if I'm right? What if I'm wrong? I don't want it to matter if I'm right or wrong. So having that really nice, solid foundation and sound money that's based upon your current cost of living, what fiat money assets you're trying to properly diversify and protect, whatever fixed rate debt you have the opportunity to pay off with a currency that has zero value, which is exactly the same as governments, or being in a position to hold your purchasing power intact. Because when one currency goes away, another currency will come in. What gold and silver do is they are the bridge to protect your purchasing power during this transition. But also, dare I say it, those assets that are really overvalued now in terms of this stuff, that's going to come down and it's going to flip flop. So this is just the historic norm. And that's what I go by. I know what happens 100% of the time as we go through these transitions, because there's data on over 4,800 currencies, whether it's current data or past data. And you see the same pattern repeat. It always starts with sound money because that's where they need to get the public confidence. And then little by little and as invisibly as possible, they take the sound money out of the system, and then they substitute their flexible money for it. And once they get you used to using it, I mean, it's genius, but think about it. Here's a $20 gold coin, a $20 gold certificate, and a $20 Federal Reserve note debt instrument. For 20 years, these operated with the same face value. The public got used to it. They're all the same. When these two went away, that was then the setup for them to take the gold completely out of the system for the public. This is what we need to put back. This is what we totally need to put back, because if we do not, the future for our children and our grandchildren and our great-grandchildren is a feudal system where you've got just a handful of people that own everything. But like the WEF, World Economic Forum, says, by 2030, you will own nothing. Well, that's not okay with me. That is not the future. Who do these people think they are? There's 1% that's robbing the 99%. But if we can get 3% of the global population, just 3%, we don't need everybody. We just need 3%. I believe that we can get redeemable gold. Don't believe that it's backed. Yeah, look at Zimbabwe. No, I have to be able to take possession of it, because if I can't, how do I know that it's real? And by the way, if I can't, then that's exactly how I know it's not real.
100%. I have
Yeah,
a coin here as well, Lynette, so I'm supporting the cause. Unfortunately, I don't have the money shooter, but I'll get it for the next one. I love it, by the way. And I think, Lynette, one of the great examples is, now maybe it changed a little bit in the past month or so, but a few months ago, real estate measuring gold was cheaper than it was in 1970s. I think once people understand that, that sort of, brings things into perspective, because what happened with fiat, real estate is unaffordable, no one can buy it, crazy prices. Measured in gold, it's actually cheaper than it was in 1970. So yeah, I think it's a very, very interesting fact. So we covered a lot, Lynette. Thank you so much for your time. If people would like to follow your work, where could they find you?
I am all over the place, highly visible. Actually, every Tuesday, I do about a 2.5 hour live Q&A, but I'm super active on YouTube, LinkedIn, Facebook, Instagram, TikTok, at, let's see, at Zang, INTL, so zanginternational.com, and on X at the Lynette Zang. But yep, and I do lots of interviews, so you can easily search me and I will be there. And if you send us our address, we'll send you a money gun. And we'll send you some dime cards as well.
Thank you so much, Lynette, and I will have all those links in the description below. So, Lynette, like always, I sincerely enjoyed the conversation. Thank you so much for your time.
Thank you for having me. I enjoyed it too.